Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Alex Coffey, a senior market strategist at Charles Schwab, to discuss the quarterly Charles Schwab Trader Sentiment Survey. This one in particular indicates that trader bullishness is at the highest level since the survey launched in 2021. Alex, it's great to see you as always. Welcome back to Trade Talks. And if market action is an indication, certainly we're seeing a lot of bullishness.
Yeah, no doubt, and completely different than what we saw in the quarter four reading for this survey. So a lot of excitement from investors. Trader sentiment, as you said, improving markedly from quarter four of 2023, and a majority of Schwab trader clients at 54% that were surveyed feel better off financially than they did a year ago from the survey timeframe. And also, about half of the traders that were surveyed feel like it's a good time to invest in equities. Now, I have a couple key takeaways, kind of high level for you from the report. And if we take a look at the snapshot, what you'll see is bulls are outrunning the bears here at this point. For the first time since 2021, more than half the respondents were bullish on their outlook. This is up from just 32% in the quarter four look at this survey. Confidence is on the rise as well, with nearly 70% of the traders that were surveyed as a part of this feeling confident in their decision making. And there's a 20% percentage point increase since quarter four in traders feeling they're better off financially compared to just a year ago from the time frame. Now, a couple of the concerns that are on the minds of traders and investors that were asked to participate in this was, and notably, this is different as well. You can see the change if you look at this on the press release, but geopolitical or global macroeconomic issues are the biggest concern on their minds. 18% of participants talked about that. This is up from just 5% in the previous quarter. 16% cite the political landscape in DC. This is a little bit more in line with where that has been, and only 9% of the traders that were participating in this think that the market is overdue for a correction. So I thought that was interesting given the run-up that we had seen in that last couple months here for this particular, for the markets and for traders here. Now, what are they looking out for? This is the big question. Traders are predicting the U.S. presidential election, the federal funds rate. So what the Fed does with interest rates and inflation will continue to dominate the market. So some of the same, and then of course the election being a little bit different.
And Alex, where are investors and traders, where they're putting their money to work, and what sectors are they shying away from?
Yeah, so when asked which sectors they felt the best about, they talk about at a sector level technology being their favorite, followed by healthcare and energy. So a little bit over the board there, quite different when you compare those. But you start thinking about names like Lilly, you start thinking about names like NVIDIA. Certainly from a sector standpoint, those are names that have done pretty well. They're most bearish about real estate and consumer discretionary names. So notably, that there's a little bit of uneasiness about those two spaces. Makes sense, I think, on the real estate, given the interest rates, the supply, and of course, when you think about the commercial real estate space being uncertain right now, I think that makes a lot of sense. From a more of like a specific standpoint, AI stocks are the most bullish, and I don't think that's a surprise.
Yeah, Alex, it's so interesting is, we're largely through earnings season now. So I want to get your take on what you're going to be focusing on as we're going into, FOMC month. We have jobs data that's coming up. We're kind of falling back into that very macro-driven environment within an earnings vacuum. But you made a point before that the survey showed people feel as strong about their finances or their portfolios have improved as certainly well over Q4, but people still feel uncomfortable about the economy and why they're shying away from consumer and consumer discretionary stocks. So I find that really interesting where we're seeing improvement across the board in retirement accounts and so forth, but there's still that shyness when it comes to the economy. I wonder if that's a function of, inflation that we've seen since the pandemic or for some other reasons. So what data are you going to be focused on? What type of consumer readings are you focused on?
Yeah, in the super short term, just the next couple of days, I think the second look at GDP is going to be interesting just because we did have some downwards revisions in retail sales, not only for December, but also November. So in theory, that should, dampen a little bit of the really, really hot number that we saw in that first look for fourth quarter GDP. Now, I don't know that that's really going to change the trajectory or the minds of investors. Sentiment has been improving. We see that in this survey, but also Things like the University of Michigan consumer sentiment have indicated that as well, which I do think we get the final reading on Friday. Then the core PCE look, which of course everyone knows is the Fed's preferred gauge. I think that's going to be interesting. I think there's probably a whisper that it's going to be a little bit hotter just because CPI and PPI have been hotter. That actually might, kind of in a backwards way, open the door for sort of a inline or downside surprise, just because the market tends to over rotate one way or another. I don't know that any of the data this week is necessarily going to change the Fed policy timetable, but it may kind of harden whether or not we're looking, kind of May, June, July. We might have more clarity there, but I think March at this point seems to be completely off the table.
All right, Alex, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.